Welcome back to watching Smart Markets right here in ET Now. Time to welcome ASK Group's Bharat Shah on the show. Very special guest, a veteran in the market. Over 3 decades of investing experience. Very few in the market can talk about that kind of experience because we all have only 35 years of history from when Sensex started, and he's been around over 30 years. A veteran money manager. We've invited him on the show on the occasion of ASK Group's assets under management crossing 10,000 crores. Bharat, good evening. Thanks a lot for joining us on the show. Let's start by this main point. 10,000 crore is a pretty large sum that your PMS has crossed. Talk to us about UB association and also the kind of returns on a CAGR basis your key schemes have clocked, and what's your investment philosophy like?
I'm 16 years with the firm in the investment management business that we have founded on the private client side. So we are as old as the private client PMS industry itself. To answer the kind of returns that we have generated in these little over 16 years, our oldest strategy, which is called growth, is compounded annually at the rate of 22%, and Nifty during this period has done about 12%, and this 22% is net of fees and expenses. So it has been a pretty satisfying journey, because any value creation exercise eventually is a trusteeship responsibility, and we are here not merely to manage a business, which of course is an underlying economic proposition, but the core reason why we exist is to create value for our investors, and that trusteeship responsibility, when it is discharged in a continuous way, in a fair way, that is a source of greatest satisfaction.
Right. Mr. Shah, we can talk about, the current investing environment. What you're making of the valuations right now. There's so much debate on whether they're fair or we're getting frothy. How does one, according to you, hunt for value in times like these?
No, I think it is, we are standing at a very vantage point of what I believe to be a kind of a critical turning point for the economy, equally for the businesses as well as for the markets. Now, investing cannot be just about trying to predict the market level or trying to time the markets, which is what probably you are referring to, whether some of the people feel they missed the rise. Investing is all about actually finding good businesses which are run by quality managements, the businesses holding promise for a reasonable growth as well as the high quality of growth. And our efforts as good investors would be to find sensible value.
What about earnings? Many would argue, and it is a sound argument, that we need earnings to really catch up to be able to justify the levels that we are at. When do you see that cycle, the earnings cycle turn, which seems to have, eluded us so far? Would you say a recovery is around the bend?
A lot of individual businesses and a lot of high quality businesses have done superbly well. They have grown their earnings at a rate upwards of 25% even over last 5 and 7 years. So, and it is not as if there are just handful of names which you can count on a single hand. There are quite a few decent businesses and large ones who fortunately account for a relatively much higher percentage of the aggregate market value. They are doing exceedingly well. So I'll once again emphasize the role of individual micro bottom-up stock picking and be concerned with that rather than with the aggregate number, which is the market earnings. And finally, having said all of these, if we are talking about headline numbers, aggregate When they will turn, I really don't have any pinpointed view, but I definitely get a sense that we are somewhere closer, where the earnings recovery on an aggregate basis also in reasonable foreseeable future will start witnessing.
Talk to us about your current portfolio. What kind of thought has gone into construction of your portfolio? Which sectors are you witnessing have much more earnings potential on a compounding basis, and hence find space in your portfolios?
First of all, we don't unduly focus on the sectors. We are not top down. We are bottom up, and we are more focused on the individual stock and its likely earnings performance and its destiny. So that's what is of critical importance to us. Second, we don't try to follow any really theme or what are popular kind of trends at a point of time. We think that kind of an approach is somewhat opportunistic and philosophically not very deep, and therefore we prefer to focus really on the underlying virtues in a business rather than trying to kind of envelop them with a kind of a theme, because these themes like fashions often come and go, and investing can't be about these fashions. It is about long-term value creation. So our focus remains the same. Find the businesses which have a meaningfully large size of opportunity, that they are run by managements of integrity and competence. Therefore, such businesses will enjoy a sound, and not necessarily the highest, but a meaningfully high, sustained long-term quality, predictable growth.
Mr. Shah, talk to us about your current portfolio in the 3 funds which you are managing, and also talk to us why you like those spaces in the market.
We have significant positions in the banks and the non-banking finance firms, in insurance area. So that forms a fairly large part of most of our portfolios. Typically the weights today would be in the order of about 25 to 30% in these 3 areas put together: bank, finance firms and insurance franchises. We have meaningfully large position in consumer non-durables, some consumer durables as well, select pharmaceuticals, farm nutrient and agro businesses. We also have the second highest weight in auto and auto parts businesses, where we believe there is a fantastic long-term Indian competitiveness at a global level, apart from the very strong burgeoning good local market. So that is an area where we have significant investments. We also have some investments in the capital goods and the like. We have material investments in the oil and fuel retailing businesses, which are acquiring a global scale and size and character. So we have meaningful investments there. We have some very select positions in the textiles area, where we believe there is a long-term transformation of the Indian textiles which is brewing, and that will benefit competent and quality franchises in that space. So these are some of the major sectors where we have meaningfully large investments.
All right, Mr. Shah, we'll leave it at that. Thank you so much for taking time out and accommodating this interview. We really appreciate it. With that, we'll wrap things up on this edition of Smart Markets. Thank you so much for watching. Up next is India Tonight.